All right, welcome back to Investor Days. My name is Derek Lalberté. I'm an analyst at ABG covering mainly investment companies and media companies. And it is with great pleasure today that I can introduce Thomas Bergström, who is the CEO of the investment company Byggmästaren. By now, I'm sure you're familiar with the setup. We'll have roughly a 20-minute presentation by Thomas and followed by a five-minute Q&A. So with that, I hand over to you, Thomas, to present Byggmästaren.
Thank you, Derek. Hello, everyone. Thank you for having us here. We have not taken part in many of these events the past few years. I expect that we are less known to many of you, and I will therefore try to give kind of a high-level overview of who we are, what we do, how we have performed, and perhaps give a few comments on the Q1 results that we published last week. So Byggmästaren in short, we are a Swedish investment company listed on First North. We work with active ownership, focusing on creating long-term value for shareholders. We measure that as development of net asset value, substansvärde in Swedish, as many of you know. We focus on what we like to call profitable quality companies with proven, sustainable, and scalable business models, strong market positions, excellent management teams, well-incentivized management teams, and we like to see organic growth, obviously, and also M&A growth in buy and build strategies. We would like to be a significant owner in the different companies we engage in, typically the largest owner, and we would like to be active in those companies. We have a portfolio of 6 active companies, 2 listed companies, 4 non-listed companies. So with an older terminology, we are a mixed investment companies that have both types of investments. As of Q1, published last week, we have a net asset value of 2.2 billion SEK. Market cap is 1.9 billion, which give a small discount to NAV. We've been listed on First North since December 2014. And we have, during the past 5 years, had an average development of our net asset value of slightly more than 13% per year, measured since Q1 2019. And we are happy to have 2,500 shareholders in the company. Brief look back at the history. The name Byggmästaren goes back to the late 1800s when my chairman and our largest owner, Michael Ahlström's grandfather, was a constructioner in the south of Sweden. Michael then reinitiated this name in 2013 when he initiated a real estate investment together with 4 co-investors here in Stockholm. Those properties were held until 2018 when they were divested and generated a good return for those first 5 years. Since then, let's say early 2019, we've been more of an ordinary investment company investing in operating businesses. We have had kind of a situation-driven approach. We've kept a low profile and kept things fairly simple up until now. Starting with the Q1 report last week, we intend to be more precise, communicate better, and focus more on what we think is our core investment criteria going forward. And I will come back to that a little bit later. If we look at how we would like to create value, this is not something new for those who follow Swedish well-run investment companies. We focus on a few investments. We would like to be very close to those companies and those businesses, always on the board. We don't mind the chair seat. We like to know a lot about the businesses and the companies and also the people. So we work as active owners. As I said, we like buy and build strategies. Several of our existing holdings have been very successful with that strategy. We are long term. We like to own companies for a long time, although we, of course, test and discuss whether we can continue to be a good owner for the company. And we like to work with co-owners, board, obviously management, and also rely on our network for advice and support. With this model, in 2024, it's difficult to find good investments. You need to find investments with certain criteria. I have a wish list here, which we and many others look for. It needs to be the right size, and there needs to be a situation. And preferably, of course, as I said, scalable businesses easy to understand, and sustainable business models. The underlying market needs to be big enough to grow for a long time. We have labeled it at around $1 billion globally. We like companies that serve an existing and growing real customer need. And obviously, we like to see historical profitability and cash flows and so on. And of course, reasonable valuation and balance sheet criteria. We think for new investments, we believe our typical entry ticket is somewhere between 50 and 300. I think maybe 300 is maybe a stretch at the moment, but so more perhaps in the lower end of this range. And we would like to be a owner with influence, which in non-listed assets definitely mean more than 20%. In listed assets, it can mean above 10%, but typically the largest owner. The current portfolio is valued at 2.2 billion in Q1. We have two big holdings that account for 70%. We like them a lot. It's one non-listed asset and one listed asset. Safe Life, not very well known so far to the public. It's a global leader in the distribution and rental of AEDs, automatic external defibrillators. We came into this company in 2020 when we supported the founders with their third acquisitions. Since then, we have made 21 more acquisitions, and we are, with this company, the market leader in Europe. We believe we are the leader in Canada, and we compete for the number one position in the US with this business. They are currently turning about 1.6 billion in rolling 12 months. We own 33% of this company at the moment. Green Landscaping, perhaps more well known. They were here yesterday and presented, I know. We came into this company in 2018 when it was much smaller. This company has also executed a successful buy and build strategy. Now consists of more than 50 companies in Sweden, Norway, Finland, Lithuania, and last year we opened Germany and Switzerland. They are now at around 6 billion SEK of revenues and have a LTM EBITA margin of above 8%. We own about 16% of this company, and they are listed on main market mid-cap. And then we have a number of non-listed and listed assets. We own Team Olivia, 17%. It's a large Swedish, Danish, Norwegian healthcare provider that we have been in since 2019. We own 90% of Fasticon, which is a very well-run and profitable staffing and recruitment company. 165 million SEK of revenues, 13-14% EBITDA margin. We own 63% of GT Media, which is a media company here in Sweden. And we own 20% of Infrea, which is a infrastructure company also listed on the stock exchange. Our performance to date then, since we became an investment company in 2019, or if we go back already all the way back to 2013, approximately slightly more than 200 million SEK went into this company when it was founded 2013, and then in connection with the listing in December 2014. And now, disregarding dividends during this time, we are at a NAV of around 2.2 billion, as I said. So roughly speaking, 10x in 10 years. If we look at the 5 years since we became an investment company, starting with Q1 2019, as I said earlier, we've had an annual average growth in NAV of 13.2%. Share price development, it turns out, is the same. So that means that the discount to NAV looks to be the same now as it was in Q1 2019. And the broad index during the same time has given close to 11% in annual growth. Some key metrics on the right side. We had in the Q1 a NAV per share of 300 SEK per share. Latest when I looked a few days ago, we traded at around 270, 269. So with a discount of around 10%. I guess it's fair to say that during these 5 years, it's been quite a strange market for a value investor. As many of you, of course, also has experienced. I mean, we started with a pandemic in early 2020. We have wars, still have wars. We've had runaway inflation, at least it looked like that for a time being. And we've had rising interest rates and many strange things. Now it seems to be back at normal again, which we think is good for a company like us. But we are happy with this development given the circumstances, although we of course strive for more. If we look at the performance per holding instead, and look at the 6 different companies we are engaged in, those 6 companies, if we look at what we have invested and where they stand now, we are around 3x on those 6 companies, with different entry points, of course. And the IRR, or the annual average return on that capital, is around 30%. Of course, driven by the 2 largest holdings. As I said before, Safe Life accounts for 40% of NAV, and Green for about 30%. Both have had a really good development. And of course, as you know, time eats IRR. So the longer the holding period, the lower the IRR, given the same money multiple. But we are happy with those developments, and we think they can continue much further, actually. Team Olivia, we've been in since 2019. It's been a fairly difficult sector in the past few years. We came in at a good level. We will come out at a reasonable level, although it's not fantastic. We valued our share in the Q1 at 210 million SEK, the same as in Q4. Going down to the bottom of this page, the media company was a situation-driven investment in the early parts of 2020 during the pandemic. We've helped them move forward. We made a transformative divestment at the end of last year, and we have now in Q1 this year received dividends that has given us twice the investment back so far, and then we continue to own the remaining part of that business. So let's see how that plays out. Fasticon, as I said, we've owned that since 2015. It's been a very good cash generator for us. So we have net invested around 30 million, and has received 73 million of dividends in the past few years, and it currently stands at a valuation of 100 in our books. And then the low performer in this group, Infrea, more of a tough journey so far. We came in 2019 in this company, worked with it. 2023 was a tough year in this sector. Generally, we also had some internal problems here. We have a new CEO since September last year, doing a lot of good things. The order book is strong, and I believe that there will be a lot of investments into the Swedish infrastructure sector over the next coming years. I'm very confident that they will come back to different levels. Board of directors, which essentially is a very strong support to the four of us who work at Byggma on a daily basis. I mentioned Michael Ahlström to the left. Long history in private equity. Started Procuritas in the late 1980s. He's the chairman of the board. And then we have a number of other directors which are very supportive. And this essentially works as, of course, as the investment committee for us. We regularly discuss the existing portfolio, and we, of course, discuss and process new opportunities in our business. Cap table, or our partners, as I like to see them. Happy to say that the original 5 investors, Michael and the 4 original investors, are still the 5 largest shareholders of the company. Then we have our friends at Spiltan as number 6. And then others in the board and management owns a significant part of the shares outstanding. So it's a lot of own capital here in the cap table, which is important to us. And we think between all of us, between the shareholders and the board, we think we have quite some experience from developing companies and working with investments. A few comments perhaps on Q1, which we released last week. As I said in the beginning, we reported a net asset value per share of 300 SEK, which was an increase from 278 in Q4, i.e. around 8%, in line with I think the index during Q1. We did not make any new investments or divestments during Q1. However, we received dividends from 2 of our different holdings, in total 130 million approximately. We expect some more cash flows from the portfolio in Q2. We had cash at hand end of March of around 150 million SEK. If we look at the portfolio, there was quite a lot of activity. Team Olivia has made 2 divestments during Q1. Early this year, in January, they announced the sale of the Swedish care business to Attendo, and that transaction closed early April. And then a while ago, they announced the sale of the Norwegian business to Humana, and that transaction is expected to close in a couple of weeks. And left in Team Olivia is then the Danish business and the Swedish personal assistance division. Infrea, supported by us, launched a rights issue in February, and that was completed now in April. So we have invested in April another 17 million in Infrea, which was our pro rata share. The issue was oversubscribed. And finally, Safe Life, our largest holding, did a new financing round during Q1, closed just between Q1 and Q2, where they raised another 350 million in the primary issue to fund future growth. And almost immediately after closing, they did 2 new acquisitions, one in the US and one in the UK. Last week, we also had our AGM. The shareholders decided on a dividend of 1.3 kronor per share, up from 1.10 last year. And we have earlier this year said that we aim to go for Nasdaq main market during 2024. And we confirmed last week that those plans are continuing according to plan. So sometime during this year, we hope to make that change. And then perhaps as a final comment, for an investment company, it's important to be transparent, and it's easy to understand the financials. So we have, starting with Q1, we have transitioned to a new accounting standard called IFRS 10, also known as the investment company standard, where all holdings, regardless of ownership, is treated as a financial investment. So value changes flow through the P&L and into the equity. So in a perfect world, with some minor differences in the future, our net asset value will be equal to our book equity. So that is a simplification, both for the external world, but also for us at the company. With that, I think I'm finished, and thank you, Derek.
Oh, great. Thank you very much, Thomas. So I'd like to start off here the Q&A session with top level, because I think it's very important. I mean, if we look back to the IPO around 2014, 2015, you have delivered an excellent performance, as you mentioned. I think it's also worth noting that it's been very steady. I think if you look at the NAV, it's only 1 year or something that the NAV was actually down. The share price has done really well also, but because of the discount varying, it's been a bit more volatile. But I think it's interesting to note this underlying solid development despite the many sectors you're involved with. So I was wondering, you mentioned the performances, the IRRs, etc. But what would you say since the IPO have been actually the top 3 drivers of your own performance in value?
I think you have to divide those 10 years in 2 different periods. I mean, the first 5 years we were a real estate company, and they saw something in 2013. They made the investment, and then during those years, of course, interest rates went down and property values went up. The intention was never to sell those properties, but the story I've been told is that there were a lot of others who wanted to buy them in 2017 and 2018. So I think actually the AGM in 2018 took the decision to sell the properties. So that was the decision made. And during that time, I think out of the 2.2 billion that we have now in assets, that property transaction resulted in about half of that. So NAV after the property deal was around 1 billion. And then the second part of this period, the last 5 years, we've been, as I said, quite situation driven, tried to find good opportunities with good value. At the same time, we had initially, during 2019, 2020, we had quite a large amount of cash on the balance sheet, at then yielding 0 in return. Now cash is yielding a bit more, but I think that needs to be taken into account as well when you look at the overall performance. But we have been able to select interesting investments, and hopefully we've done something good. But it's all about finding the right people and finding the right investment. If we have management teams like in Green Landscaping and in Safe Life and in others, that's what you look for as an owner.
For sure. Sounds very good. And I think we just have time for one more, but you mentioned these divestments here from Team Olivia and also from GT Media, for example, putting you here in Q1 at a net cash position of 150 to 160 million. How should we look at this going forward? I presume you are prioritizing finding new investments, but what is your sort of target when it comes to the balance sheet for the company and priorities from here?
We are looking at new investments. We have seen an increased inflow the past few months, and we now also have a capacity, both operationally and financially, to look at new investments. Those divestments that we did in Q4 in a few of the companies were partly driven by the refinement of our strategy. So we wanted to release cash to deploy those in type of companies that we want to see going forward. So we are looking, but as I said, it's the competition for good companies and good assets is it's very different now than 20 years ago or 30 years ago. There are many investors looking for companies like this. So it's important to look at many opportunities, meet a lot of people, and drink a lot of coffee. That's what we look for.
Yep, got it. I think that's it. We're out of time. This is, as I mentioned, a quick format, but hopefully we'll be able to follow up soon again. And thank you very much, Thomas and Byggma for participating today.
Thank you.